Hi everyone, it's Chelsea here, bringing you another segment of Living in Southwest Florida. Here in Southwest Florida, there is often a priority to simplify life, and many people moving to the area may consider condo living with all of the amenities that HOAs can provide and care for to be more their speed. So today, condo hunters, I'm talking specifically to you as we discuss tips to help with your condo search. Let's pause real quick before we jump in though. If you go ahead and hit that like button for me, I would appreciate it. This way YouTube algorithms share this information more with others. And as a thank you, please enjoy this picture of a great blue heron right outside one of my clients' new homes. We were there to do the final walk that day before closing. And as we stood there, this beautiful guy swooped right in and just landed a few feet away. These experiences of wildlife being so accessible like this one is one of my favorite reasons for living in Florida. And so I thought I would share with you. And I wouldn't be doing my job well if I didn't remind you that we always love helping people from all over the country buy and sell their homes here in Southwest Florida. So if you or anyone you know of are even thinking about moving, then feel free to use that contact information below. All right, let's jump right in. Moving to Fort Myers can be an exciting experience, but can also be a little bit scary to make big life changes, especially if you're unfamiliar with the area. I often talk to buyers who are coming here to downsize and begin a new chapter, and they may be looking for things like maintenance-free living or a more affordable price point that condo living can provide. So I figured it might be useful to provide 5 tips for condo hunting for newcomers to the region who are looking to purchase their home or vacation property here. Number 1, know the different types of options in Fort Myers. Different condo styles can often be found in different locations. Here we tend to classify condos in one of 6 different styles. Low-rise style buildings that have 1 to 3 stories. Mid-rise style buildings will have 4 to 7 stories. High-rise style buildings have 8 or more. There's attached villas, detached villas, and then townhouses, which are more comparable to like a row house from up north. All of these have their different pros and cons. Low-rise buildings are most plentiful, and there are usually twice as many available of those than any other subset. High-rise buildings tend to be located in luxury-style communities that are resort-style living, and they usually are in areas that have unparalleled views. Villas will be more privacy and more like living in a traditional single-family house, but they can tend to be a little bit more expensive. An attached villa will usually be more like a duplex, and detached villas are definitely more like a single-family home, but they still share that lot with other houses. Like, for example, this one in Naples. They all stood separately, but they were still all also together. And last, but certainly not least, are townhouses, which consist of 2 or more floors within the home's unit. So if you don't want to climb stairs, then keep that in mind. Number 2, let's learn about HOA fees and dues. All HOAs are not made the same. The Homeowners Association is typically in charge of how things are managed for the community as a whole. That means that there are certain regulations that all homeowners need to abide by, and each homeowner contributes to the HOA costs. But how much this cost is can vary, just as what the Homeowners Association covers can vary. Some buildings may have landscaping, a pool, spa, or even tennis courts and golf courses that are all cared for. And those items are the ones that buyers really want to ask about. But some local buildings also have a wealth of luxuries like a movie theater or boat slips for residents. And most buyers don't think about asking about that one. Number 3, additional fees and CDD taxes. While discussing the HOA fees, I should also mention being on the lookout for special assessments or CDD taxes as part of those condo fee structures. Special assessments will sometimes be levied on condo owners to help pay for major construction projects, like say new roofs for the buildings or repipe of the sewer lines. Be prepared to see these on a condo if you're interested and check and see if they've had any added on costs. Also, while special assessment is typically short-term, CDD taxes could go on for decades. We definitely want to watch for those. A CDD is a type of bond that allows for a developer to develop and pay for infrastructure and amenities in a community. That bond is then paid back by the residents of the community who are enjoying all of those amenities and what the neighborhood has to offer. Homeowners living in a CDD community are assessed through their annual property tax bills in the form of what's called a non-ad valorem assessment. The portion of the CDD fee is actually going to the municipal bonds repayment, and then there's actually another part that goes towards the operation and management fees and the county taxes. While the municipal bond fees can dissipate once they're paid off in 25 to 30 years generally, operation and management fees and the county taxes will still be required to be paid. Number 4, understanding loans for condos. This one's actually in flux right now, so it may be a little trickier to navigate. Government-run mortgage companies like Fannie Mae and Freddie Mac have overhauled their requirements for condo and multifamily mortgages in response to the Surfside condo building in Miami last year, and their new guidelines are now super strict for lending in these sectors. The condo associations now have to have a certain insurance and financial statements like they did before, but they also now have to fill out a HOA questionnaire with new questions about the structural integrity of the community and whether there are any code violations anticipated. This sounds like a really amazing protection for buyers, and it is. But as you can imagine, answering some of these questions become challenging for the HOAs who may or may not have the capacity to fill out these types of questions, including potentially vague questions like what might happen in the future for code violations. And without that form, or with the wrong answer, lenders are going to need to decline the application. Now, this isn't completely unheard of. If you've ever shopped for a condo using an FHA loan, you may have seen similar hurdles to jump through because the condo community requires FHA passing just like a single family home would. This can be challenging, though, for an entire community to get approved, and as such, there are already very few older communities that can support FHA financing. In the past, the solution has been to look at conventional loans instead, and currently Freddie and Fannie have 70% of the condo loans. So this makes up a huge market of the condo financing. So as you can imagine, now having the extra hurdles of both styles of loans can be even more challenging to get through. But hope is not lost for condo financing. If the loan is denied because of Fannie or Freddie's HOA certification process, there are other loan products called non-warrantable loans. These typically come with a slightly higher interest rate than a conventional loan, and they may or may not require a larger down payment to have them for more remaining equity. But for those of you who are currently condo shopping, Fannie Mae's new regulations did go into effect on January 1st, and Freddie Mac's regulations will be going into effect on February 28th. Number 5, who owns the community? There is a rule in financing that a single owner cannot own more than 20% of the units available in a condo community. This is because should something happen to that majority owner, the condo association could then have their HOA underfunded, which is a risk to the buildings and the other owners. This rule is also something that comes from the federal lenders, Fannie Mae and Freddie Mac, so it's very difficult to bypass. There are some private lenders that will provide options, but those typically also come with higher down payments and interest rates, just like we discussed earlier, in order to protect the lender and make up for the risk. This is a difficult thing to suss out prior to finding the right home or pulling title records, but keep in mind that it does happen and it should be on your radar. As always, I would love to hear from you. Is there anything that you think that I might have missed? If so, feel free to reach out. You can find my contact information in the video description below if you'd like to run questions by me or if you'd like to hear about your specific scenario. Myself and the network of agents I have throughout the United States are here and ready to help you with your needs. Also, feel free to use CapeCoralFortMyersRealEstate.com for all the latest listings to hit the market and begin getting comfortable with our marketplace. There's no obligations. If you are ready to go ahead and get that ball rolling for your move to Southwest Florida, then there's a link in the description below, and it's set up with a personalized home search that'll get tailored to you. Oftentimes when you search on web aggregates, it limits your capabilities, but when I build this search, you'll be able to have many more options available, and we can begin to have that conversation of what your home in Florida will look like. Don't forget to add me on social media and follow along as we post weekly articles and information that you may find handy and give you insight as to what life in Florida looks like. And as always, we really appreciate it when you leave us a comment and hit that like button, subscribe button, and notification bells so that you can be notified when we drop future videos that may help you with living in Southwest Florida. Thanks again for watching, and until next time, I wish you much health and happiness.